Welcome everyone. Welcome to the FinvestTalks live session. And today's topic is roadmap for financial freedom. And I think this session is going to be really amazing because the purpose behind starting my page Finvestera was to educate at least 50,000 people to help them to achieve financial freedom. And for that, we have with us CA Sarthak Ahuja. And let me give some brief background of him. He is CA, he is CS, he is CMA, DFI, and MBA from Indian School of Business. So Sarthak, around 200 people have joined the live session. So I request you, I take your permission to move ahead.
100%, please.
Yeah. Okay. So jumping on first question of the live session. So most of us talk about the financial freedom. So what exactly financial freedom means to you? Yeah.
Okay. I think financial freedom is literally being able to do anything with your time. So I think there are two currencies really. One is money, which helps you buy things. The other is time. And real wealth is when you are not really working for money. And when you're not really working for money, you can choose to do whatever you want with your time. It could be exploring areas of your interest and monetizing on them. It could be following passions, hobbies, working only as much as you want to, and only when you really enjoy working and adding value in certain things. So yes.
Yeah. And let's take one example. Suppose a person is earning 25,000 rupees salary per month. So how he should allocate a percentage of his income so he can achieve his financial goals?
Okay, so I think before we kind of talk of allocation, I think first deal would be ensuring that they have health insurance. I think that's really important because medical expenses these days can actually add up to a substantial sum. I personally feel that a person should in no case take a medical insurance with a coverage of less than 5 lakh rupees. That should be the bare minimum in India. And it should ideally be no less than about 6 months of one's in-hand income. Correct. So if one is ensured that they have health insurance, in addition, if there is not a lot of sources of passive income, if there is not a lot of family wealth, which is constantly generating like a source of passive income for you, it's also important that the earliest possible, if you can take a life insurance.
Because the premium remain constant throughout the life.
Correct. So the sooner you take a life insurance policy, the better it is because the premium gets fixed for what you need to pay for the subsequent years. And ideally one should have at least 20 times their annual income is correct. Their annual income is
and if you are below 30 years of age, then it's hardly around 1,000 per month premium for 1 CR cover.
Correct.
What we take, in life insurance. Absolutely. So, talking about that financial freedom, I ask most of the people that how much purpose do you need to be financially free? So most of them randomly reply like 1 CR, 5 CR. So I ask them what's the basis of that, and they are completely blank on that. So for me, financial freedom means certain investment amount which will help to generate that XYZ income per month, which will cover my all the expenditure of the month, and I will be able to do whatever I like. So for me, the financial independence is like this. And my next question was related to insurance only, and you properly described about that. And moving on to the next question, what are your views on multiple source of income?
I think it's almost a necessity these days. So you can't really depend on just one source because God forbid if you're only dependent on your salary and tomorrow you happen to lose your job for any reason or you have to resign for any reason, any personal reason, you have to move countries as one person just kind of mentioned in the comments. It can really hamper your source of income, which is why it's best to build multiple sources. At certain places, maybe the easiest thing for people to do is probably take up some assignments that they can do over the weekends when they're not really working for their employer.
Okay.
It's a separate question though whether your employment agreement allows for that or not.
Yeah, yeah.
But I
Now
think
there's that moonlighting issues going on. Yeah.
correct. So there are moonlighting issues for sure, but in case there isn't, and you can, why
Yeah.
not do that?
But
Or if
you can
it's
be a
not in
part-time
direct
content
conflict
creator,
with
like,
your absolutely, if it's not
yeah,
in direct
anything. You
conflict
can
with your
pursue your
main
passion.
absolutely you can pursue a passion, and some people know how to play a musical instrument or sing, and
Yeah,
as
yeah.
a side hustle over the weekends they can just teach that, and I'm sure the employers will not have a problem with it, because you're not really monetizing the same skill that you're using with your employer, so that's absolutely fine. So
Yeah,
100%
yeah.
recommend it.
Okay, great, great, great. And our followers will be more than happy if you share your multiple source of income, like
Oh,
some.
I don't
uh,
know. So I think the only so while of course there are multiple sources, the one that I tend to focus on most, everything
mhm.
else would possibly be passive. One I tend to focus on most is how am I upskilling myself, and what kind of
Okay,
additional revenue am I able to generate from a skill that I've learned this year. I think that is my goal every single year. So a very simple example, because we're speaking on Instagram, could be, last year when I started making videos, the goal
mhm.
was, regardless of all my other sources of income, what is an additional revenue stream I can generate from this additional effort that I'm putting in. Similarly, every year I have certain different passions which or projects that I try to kind of develop, productize and automate, and then generate incomes out of. This year I am really interested in pursuing um, uh, a project in artificial intelligence. So I'm trying to build
Yeah,
a product in AI
great,
with a
great, great.
friend. Apart from that, of course, I just launched a book, and while
Yeah, yeah, yeah.
royalty incomes are not substantial, but
Okay.
it could be a possibly third source of
Uh,
revenue.
can you tell something more detailed about your book?
Okay,
On
so my book is called Daily Coffee and Startup Fundraising. It's
okay,
basically, I, over the past few years, must have read at least, if not more, 60, 70 books on
that's
startups finance, on corporate finance, on how to build a business. But most of these books I realized were based out of Silicon Valley and experiences of American entrepreneurs.
yeah,
I felt that there was one book which was probably missing, which would answer all questions of the Indian entrepreneur, right from
exactly.
validating the idea, building the minimum viable product, achieving product market fit, explaining all these terms, how to go about measuring these metrics, achieving growth, pitching to investors, raising money, how to structure the deal, how much equity to give, how to value your startup, how to negotiate
Yeah.
a term sheet. I feel all of these things are available in different books at different places. So in my
Yes, yes, yes.
DMs, I would get a very common question, which would be, please recommend a book on startups.
Yeah,
And there are
yeah, yeah,
so
exactly.
many. I felt there was not a single book which covered everything in great detail
Yeah.
for the Indian entrepreneur. So I
Information
think
is
that was
available
the
in fragmented way. Yeah, yeah.
absolutely. So I think the idea was to consolidate all of that and
That's
offer
correct.
that. So the book is called Daily Coffee and Startup Fundraising, and is right now available only on the website shop.visor.in. So people can order it on
Okay, okay,
shop.wyzr.in.
okay,
And
great.
tomorrow and day after, 2 days, I'll be signing a lot of copies for anyone who's pre-ordered, and they will
Okay, great.
start shipping out on the 12th. So anyone who's ordered the book so far
I,
will get
I
a
will
signed
surely
copy.
do that. Yeah, I will
Yeah,
surely. And I have watched one your amazing reel on book publishers where you
correct,
talked about how book publishing business is related to that of venture capital
correct,
in that. Yes, 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 yes. So
correct.
it was really amazing. Yeah.
Thank
So
you.
moving on to the next question, Tata. First, we talked about savings, and then we talked about the insurance, which is the foundation of the financial freedom journey. Now, I will ask you about if someone is saving. Suppose one person is of 25 years of age, and he want to create a well diversified portfolio. So, what percentage he should allocate to the various asset classes like equity, debt, gold, cryptos, so he can achieve his proper financial goals.
Okay, so the first step after you've taken health insurance and life insurance is
Mm.
to build an emergency fund, which could
Yes.
in most cases not be less than 6 months of your in-hand income. So
Yeah.
where do you first allocate that emergency fund? In case that is not ready, that has to be your first priority, and you could
Okay.
put it in debt mutual funds, which are highly liquid. So not
Yeah.
long term, but short
Yeah.
term liquid debt mutual funds.
Mm-hmm.
You could put 1 month's spend in your savings account,
Savings
or
account. Yeah.
which could be an auto sweep account. So whatever balance is left is
Yeah.
automatically
Automatically transferred
going
to
into a
FD.
fixed deposit, which is liquid.
Yeah.
Once you've done that, you have to also save for certain short-term goals that you may have. So for example, someone who's in their early 20s and wants to save for
Yeah.
an MBA or a master's program,
Mm-hmm.
I would not recommend that they put their money in equities, because maybe say in the next
Yeah.
2 years
It
they
is highly
need that
volatile.
fund.
Yeah.
So then they may put it in a debt mutual fund, which has a duration of about 2 years. And if you feel that there are no short term goals that you're really saving for, and all of that is already taken care of,
Mm-hmm.
then one basic thumb rule to follow is the 100 minus age rule, which says that
Yeah. Yeah.
if for example you're 30, then 100 minus 30, at least 70% of your long term investment portfolio should be in equities. I
Liquid.
mostly recommend that people just invest it in an index fund or an index ETF. If they don't have the time to research stocks and pick stocks, I think it's
Mm-hmm.
much better to just invest it in an index ETF from an equity
Yeah.
standpoint. And
Yeah.
the remaining, of course, has to be distributed across certain safer assets. So say
Yeah.
if 30% is going to be invested in safe assets, I would
Mm.
recommend that about 20% could be in debt mutual funds, and the remaining
Mm.
10% could be in forms such as gold.
Gold.
You could save for some other kind of you could put it in REITs. You can
Yeah.
also do risky investments. So if you
Yeah.
really are interested in investing in something, just ensure that out of your total investable money, it's not more
Mm.
than 5 to 10%.
Finance.
That's just a discipline to follow.
Great. 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 So coming on to the next question. So majority of both of us audience are in early 20s and 30s. So any advice for them how they can start their journey with small amount?
Okay.
Yeah.
So I think the easiest way, which is recommended, is of course through SIPs. So regardless of
Yeah.
whatever is your income, I think the first
Mm.
step is that you need to set aside some amount. So
Yeah.
there's a formula which is said that income minus expenses is savings.
Savings.
And one of my professors of finance back in
Yeah.
undergrad used to say it's actually income minus
Income
savings,
minus savings
which
is
is
equal to it.
expenses. So the
Yes.
first step is to just set aside at least 30% of your monthly income
Mm-hmm.
at the bare minimum, and
Mm-hmm.
put it in an investment, and the remaining you can use for your expenses. So
Yeah.
typically another thumb rule to follow is 50/30/20, where you say
Yes.
50, not more than 50% of your income should be for your needs, not more than
Mm-hmm.
30% should be for your wants, and at least
Mm-hmm.
20% has to go in savings. And I feel that
Yeah.
if you're in India, if you're earning more than 1 lakh per month, you should
Yeah.
ideally work towards flipping it around and saying that no more
Mm.
than 20% should go into needs, no more than 30% again should go into wants, and at least
Yeah.
50% should go into
Yes.
savings.
Yeah, and even those who ask me this question, first of all, I tell them if you have a really small amount and you are in early phase, you should invest that money on yourself, on your
Correct.
learnings, so you can
100%.
improve your earning potential in future, and then you can save that accordingly. So first, I
100%.
recommend them to invest on ourselves first. So moving on to the next question. Can you recommend some free and paid resources to those who want to learn about the personal finance investing or yes.
Personal finance. So I think one great free resource I see is, of course, FinShots. I think while it's not totally personal
Yeah,
finance, they do a lot of personal finance content
it is
also.
now backed by Zerodha and that sort of yeah.
Correct. So they do a lot of personal finance content also. They also do a lot of business news. I think that's a
Yeah.
free newsletter to join. There's a smart Niveshak. Yeah, in essay
Safal
Safal
Niveshak, right.
Niveshak, correct. So Safal
Yeah.
Niveshak is
Blog.
a brilliant free newsletter for people to join,
Yeah, yeah.
which is great. Apart from that, paid resources for personal finance, I would say there is this one book called What
Okay.
Every Indian Should Know About Investing.
Okay.
And I found it at a bookstore about 4 months ago. I've put up a
Yeah.
picture of the book on my story highlights on my page
Okay.
under the highlight called Read. So I think
Okay.
it's a wonderful book because it talks about every investing avenue, right from something like National Savings Certificate or NSEs
Yeah.
to post office deposits to how to pick a health insurance, how to pick a life insurance policy, to how
Mm.
to allocate your
Yeah, money.
resources. What is the
Yeah.
Sukanya Samriddhi Yojana? So I think
Exactly.
it's a brilliant ready reckoner for whenever people want to refer
Yeah.
to it.
And a few of some YouTube channel you can recommend to the audience.
Absolutely. I think a lot of people are doing great content. Mr. Ankur Variku does great content on personal finance. Then
Pranjal
Akshat
Gamble.
Srivastav
Yeah.
does great content. Pranjal Kamra does amazing content. In
CA
fact,
Rachna is there. Yeah.
absolutely. And Pranjal has also written a book which is
Yes.
brilliant. So
Yeah. Yeah.
yeah, these are great resources. In fact, even if someone wants to go a step further, Zerotha has this app called the Varsity app
Yeah.
which
Varsity.
people
Yes.
can which people can download and for free learn about several
Yes.
topics in investing.
Exactly. Yes, thank you, thank you. So now, our Miss, I want to summarize all the things. So first, we talk about how we should save, and then multiple sources of income, how we can increase our earning potential, and then we talked about the insurance because it is a basic foundation of your financial freedom journey, and then free resources we talked about. So now moving to the general questions, which I took from 3 days ago. I posted one story regarding this, and I took the questions from them. So it is related to general topic like startup taxation. So first question is from the audience, like as you advise to startups and SME, what common mistake they do which lead to their failure and how they can improve their efficiency.
I think the first most common mistake is not having a weekly MIS. So a weekly
Okay.
MIS is absolutely essential because it keeps you on track and you keep tracking the real key metrics on a weekly basis. I think that's the first step of discipline to build in.
Okay, okay. And how they can improve their MS efficiency by weekly tracking that.
Absolutely. So I think the first step is just designing an MIS system which is going to extract the maximum insight for them. It's an iterative process, so they can get a CFO or a virtual CFO to kind of design it for them. And
Okay.
once that is done, then it's just discipline of tracking it on a weekly basis, because
Okay.
most businesses end up looking at their financial numbers at the end of the quarter or at the end of the month. And then, the basic difference is, are you looking at your numbers 52 times a year or are you looking at it 12 times a year? And the
Yeah,
difference
yeah.
is of
So
four
we
to
can
five times.
take informed
It's
decision
phenomenal.
quickly. Yeah. Yeah.
Correct.
Got it. Got it. Got it. So a second question is emerging field according to you in which young aspirants can focus on.
Okay, so emerging fields, I feel this is something that Andreessen Horowitz, the VC firm, says, which is the
Okay.
ABC of future investing that they're focusing on. So A stands for AI or artificial intelligence,
Yeah.
B stands for biotechnology, and
Yeah.
C stands for crypto and blockchain. So these
Okay.
three fields, I think, summarize it very
Yeah.
well.
Yeah. Yeah. So this ABC was a really great answer. Third question is, should I invest in my business which is yielding more return or invest in market where I don't understand that much?
So I think your business may definitely yield better result, and it may give you the comfort that you have things in control. So definitely do that. However, I mean, you can't depend on just one source of income. So like we said, mm, at times we would hope that you grow to such a degree that you don't need to invest any more money into your business, and you keep churning profits and keep reinvesting
Putting that on
part of the
autopilot
profits
mode.
and take out some to invest in other avenues, because it just ensures that your income streams are more diversified. So if God
Exactly.
forbid the business comes to some kind of risk, at least you
Yeah.
have other passive sources that you've built on the side.
Yeah. And even I think it's not the matter of generating return. It's about diversification.
Correct.
Like don't put your all eggs in one basket. It
Correct.
is like that.
Absolutely.
So the last question from the audience was your views on cryptos.
So, honestly, I personally have not invested any money
Okay.
in cryptocurrencies. And that comes from a personal place of preference of not taking too much risk with my money. I take moderate risk. I am a long-term investor. I don't even pick stocks. I just invest in index ETFs.
Okay.
So, and I, from a risky asset class perspective, I do have some investments in startups, and that's what I
Okay.
do. But crypto and blockchain, I don't think I understand it in so much depth to be
Okay.
investing my money there, which is why it comes more from the position of information asymmetry. I've read a bunch of books on blockchain and cryptocurrencies. I've also recommended them in my story highlights, but I still feel that there is more depth that I probably need to go in before I understand it.
Definitely. And definitely you should invest only there where you can understand the business, as Warren Buffett said. So I think our time is now exceeding, and it was a really great experience taking live session with you. And I hope audience find this session really informative and insightful. So thank you, Sarthak, for giving your precious time, and I'm hoping that we will create more live session in future. Right?
Absolutely. Thank you so much, Swaraj. It was an absolute pleasure to be on a live with you. See you
Yeah.
around.
Thank you. Thank you
Okay.
very much, Sarthak.
Bye.
Bye.